Guruprasad Srinivasan, Executive Director and CEO, Quess Corp, with us this morning. Lohit Bhatia, President, Workforce Management, Quess Corp, with us this morning. Welcome to both of you, and thank you for your time to us here at NDTV Profit. Mr. Bhatia, I'm going to start with you, and before we get to the numbers, etc., just want to know what the IT consulting space has looked like for you and the outlook there, because top of mind and the biggest talking point right now is what is happening to employment in this space.
To be here on the channel today morning. First and foremost, we've delivered a solid set of results and numbers yesterday night. And you would see that there are three broad portfolios that have. That general staffing portfolio, which is the India business primarily, has added 21,000 headcount. If you notice from the IT block, which is the professional staffing, it's now delivered a 12% EBITDA margin and contributes about 30% of what the group delivers in terms of margin. And international, where we were having some headwinds from Singapore, has started steadying the ship with a growth of 29% year on year over last year, and also delivering a little over 6% EBITDA margin growth. Coming back specifically to your question on technology and how we are viewing this, India is about 6 million workforce, and we are about 6,800 contract workers that we deploy to the clients. 3/4 or 3/4 of this go to the GCC space. We have about 300 customers that we work with, and majority, like I said, 3/4 go to the GCC space. We are noticing a lot of niche demand coming into India as transformational projects are also being shifted to the land where talent is available today. So we consistently see that growth coming in. It's something that we started building from 2020 onwards, and we are glad with the results that we see in 2025.
Got it. Well, Mr. Srinivasan, good morning, Neeraj here. And I'm trying to understand if what the Q2 has shown, which may be good, but not exceptional, right? Is this laying a base for an uptick in hiring ahead? And do the key sectors that contribute to formalized hiring give you the ability to be able to predict for the next 6 months?
First and foremost, I would say it is exceptional, and because we have been adding a net add of 21,000 probably after 6 quarters, which means to do a net add of 21,000 in a quarter, we would have added almost about 115,000 people, and almost about 80,000 would have exited from the system. So the engine really, the open mandate and the delivery capability that we have built is something that we are really proud about. And
Mr. Srinivasan, sorry, I just want to interject here just to tell you that I would love to understand what it does for the future, but sorry to interject you. The reason why I said it's not exceptional, because while you've done that, the reported numbers which the finance world is looking at is showing a low single-digit number, right? And which is why I said it was not exceptional.
Absolutely. So few sectors, definitely we are seeing the trajectory coming in Q3 as well in terms of outlook. If you look at manufacturing and consumer retail, telecom, FMCG continues to still give us a strong outlook as we step into Q3. Manufacturing, especially industrial and manufacturing, is where we are seeing a lot of open mandates coming in from. So one, of course, on back of GST reform, we did ride in Q2, but yes, as we step into Q3, we are still seeing active mandates coming in from specifically from CRT and manufacturing.
Okay. Okay, so you spoke about GCC, and the point is well made, but as my research analyst was pointing out, he was specifically asking about professional staffing. I'm going to take that question to either one of you. In fact, either one of you can give us that outlook. It accounts for a very small part of the revenues, but profit share is significant. And so therefore, both the top line guidance as well as the bottom line guidance on that particular sub-segment over the medium term, which I think we can define as the next 2 to 3 years.
So if you look at last year, we delivered an EBITDA growth of 46% specifically in professional staffing. And this year, if you look at, we are at 37% year on year in terms of EBITDA growth. While you're right, our revenue growth would be slightly low because these are high margin businesses, and specifically 73% of our exposure is in GCC. We still continue to see our open mandate level on an average about 1,300 to 1,500 headcount, with more GCCs being set up and the demand coming in from that segment, we are still, I think we are still quite happy to say that at least we'll continue to grow about 20% EBITDA year on year in this space.
Okay. Mr. Srinivasan, the one final question from my end would be, if this net addition numbers that you're talking about, which is a landmark number for you, and I believe Lohit Bhatia referred to that as well, does this lay the ground for the reported financials as we see it every quarter to show some sized upticks in quarter 3, quarter 4, maybe FY27? Can you give us some color on that?
So a couple of empirical data there, Neeraj. If you look at the rural consumption has gone to 8.4%, and it's increasing drastically. And if I look at the toll collections, the traffic toll collections, it has gone up by 12%. So where is our mandate coming in from? If you look at almost 37% of our mandate are coming in from tier 3, tier 4 locations. And we do about 33% in tier 1. So as we move forward, we are seeing most of these industries, whether it is BFSI, e-commerce, logistics, moving into tier 2, tier 3, opening up their new regions. We are seeing demand coming up with more acceleration on digital for BFSI, the adoption level going up. Means a lot of feet on street activity that will happen in these locations in terms of onboarding merchants. So we are seeing demand coming in from tier 3, tier 4 locations, and that's where the volume is going to come up from.
I started the interview with this question. I'm just going to reiterate it because still waiting for a very clear outlook on this. Mr. Srinivasan, let me come to you on this. What is the IT picture looking like? What is the IT headcount this quarter, and what is it looking like? Because you have company after company talking about maybe making their task force AI ready. It's going to be lesser number of jobs.
So I think, as Lohit said, there are about 6.5 million people, of which IT services has about 1.5 million, and balance is between GCCs and non-tech companies who are using IT who are building their own regional strategies or IT strategies within. So from that standpoint, our demand is coming in from GCC and the non-tech companies who are hiring. In fact, if you look at most of the non-tech companies who are accelerating their own digital strategies, the demand are coming in up for us. So from that, from that stand, we definitely see demand coming in. IT services may not continue to hire the way they were hiring. Post-COVID, they were rampant hiring, and the project cost optimization that is going on, we still see massive layoffs happening. But however, the digital acceleration in the country has not stopped. It is not that these people are jobless who are coming in from IT. They are being placed in other companies where, between GCCs and non-tech companies hiring for themselves.
Okay, fair enough. Thank you so much, Mr. Guruprasad Srinivasan and Lohit Bhatia, for joining us. Management of Quess Corp talking about the outlook.